Some banks are starting to fail, and this leads to the question of why are they starting to fail now out of all times? Well, the truth is a lot of this is pretty predictable. When the Federal Reserve kept interest rates for 13 years, there were a lot of bets on that kind of environment staying for a long period of time. Bonds were issued with extremely low interest rates, and mortgages were made with really low interest rates. And banks were buying these bonds at exceptionally low interest rates. They were expecting to hold it for maturity. But with this rapid, huge increase in interest rates, it was guaranteed to break something. We first had FTX, and you had Silicon Valley Bank. And what did Silicon Valley Bank? Did they do something like Sam Bankman? Well, in a way they did, and because people provide deposits, and what do? They have to do something with the deposits. It's kind of like a hidden secret of the fact that banks don't keep their deposits at the bank. They do something with it. They invest it usually in things that are relatively safe, like bonds or mortgage-backed securities, stuff like that, mortgages. But the truth of the matter is, when these rates rise dramatically, their investments in these bonds go down. Now, of course, if they hold to maturity, they'll get all their money back. But what happens when customers start withdrawing their money because they're starting to wonder about the solvency of the bank, or maybe they just want to take money out because they can just buy their own bonds and get more money than what the bank is willing to offer. So it does this kind of move away from the zero interest rate policy. It was guaranteed to cause problems, but the only issue is how fast to move. Some people said they should have moved, the Federal Reserve should move actually even faster than they have. Some people have suggested they should be around 10% because under the Taylor rule, which is he's a smart academic from Stanford who said that the interest rate needs to be above the inflation rate in order for inflation to go down. On the other hand, there are people who realize that if you raise the interest rates too quickly, you will start to blow up some of these financial institutions because they just can't handle this, because the mismatch between short-term borrowers like the depositors and their long-term liabilities or assets rather, it starts to be a real big mismatch. And I actually suspect, despite the fact that the federal government apparently saved the day and fixed everything and everything is supposedly back to normal, the truth of the matter is I don't think that it's quite over. I think that just like FTX, that wasn't the only thing that screwed up. I mean, you have these kind of issues that are happening right now. It's really not the end. What do you think, Danny?
I think the whole system will collapse.
The truth is that it really is impossible to change what's been going on in a very methodical way, and for there not to be any after effects or aftershocks. And the truth is that it's going to take a while for the impact to be felt, because it takes a while for the problems to be noticeable. In fact, I don't have all the information that exists, and neither do depositors. That's one reason why a lot of them are panicking, because they don't really know about what's going on at these banks. They just know that something is not right. Sometimes just as the first sign of fear causes a panic, and then the panic causes a real problem to happen. So the next thing that probably will be a big problem, some people think, are the zombie companies, because these are companies that kind of been kept afloat for a long period of time due to low interest rates. They have been able to get investors who continue to invest in their company despite the fact that they don't make much in revenue. So the problem is, because so few of us really know what is happening in the economy, I think there's an incredible amount of fear. But at the same time, people are quite right to know that there's something wrong when you raise interest rates this dramatically. They know something, they're not sure what, but they know something is about to cause more problems, that there might be some contagion. And the funny thing is, people are almost always wrong about what is going to be the issue. Like, for instance, people thought that Silicon Valley Bank was going to be the contagion. Maybe that isn't going to be the thing that causes contagion. Maybe there will be a bigger bank, or maybe it's going to be a crypto fund, or you never know. The truth is, there's just an incredible amount of fear, and I think people are smart to be in cash, but at the same time, you really need to be under the $250,000 FDIC limit, because even though Silicon Valley Bank got bailed out, there's no real guarantee. I mean, not the bank didn't get it bailed, the depositors did, but there's no guarantee that that's going to be something that continues indefinitely to other banks. So you really need to be careful. It makes you wonder, actually, that a lot of people running this bank, they didn't seem to really understand the risks of higher interest rates coming along, but the depositors who had a ton of money, they didn't seem to really be too concerned either. That is kind of a weird thing, that there almost seems to be moral hazard. People just thought that they're going to get bailed out, and that is a weird thing. You just put billions into this one bank, Silicon Valley Bank, and if it were me, I would have, if you had billions and you don't intend to invest it, you want to use a cash instrument, seems like you would use short-dated treasuries instead of just putting it in a non-FDIC insured bank account, because only $250,000 is secured. So that is a weird thing. It's something to keep in mind. It shows you that even really wealthy people, they're really not that much smarter than you and I. They make mistakes as well, and that's going to be the process unfolding as we watch the stock market and the economy continue to crash. So I look forward to hearing what you say in the comments below. Subscribe and let me know what you think of bailouts, or whether anybody who had more than $250,000 should have gotten bailed out with the Silicon Valley Bank. See you in the next video.